All right, guys, welcome back. This is part 2 of the Discord Q&A. We're going to continue answering the questions that we had, although I did record some of these previous days, so if the lighting all of a sudden changes, it's because literally the time of day is different, and I don't have good lighting in my setup yet, so we'll get there. But yeah, if you haven't seen part 1, go ahead and check the channel. It's definitely in there. All right, let's dive in with question 1 by Mr. Arcania. Maybe something for those who bought in at the hype or relatively high number to get their motivation straight up again. Like, I don't know if it's doable, but some long-term insight. See many people at Wallstreetbets Elite Chat who went in pretty high and losing their optimism. Yeah, I think, it's going to be difficult because I think a lot of the money that was invested, maybe people shouldn't have been investing. They didn't know the risk and they invested too much. So I sort of touched on AMC's long-term potential. If you're in GME, it's going to be a similar situation. Look at their charts. A lot of people have confidence in their new managerial team. In terms of hype or motivation or optimism around a squeeze, my optimism is definitely less now. But again, I'm not an all-seeing eye, and it could still happen. With these very, very risky investments comes exactly that, a lot of risk, right? It's potentially possible that you'll just lose everything. And so sadly, I think a lot of people were dragged into this without the knowledge ahead of time. Like I said, me personally, I didn't even invest more than I think 6% of my assets. So I think like another thing I want to point out is like long-term insight. Somebody came up to me today and said, hey, I think I might sell AMC. And I was thinking, selling AMC at I think at this point it was like around 6 something or 7 something. If you think it's at all possible that after COVID ends, the stock price goes up to, let's just say 850, then that investment year growth from now till then would be something around 20%, which is extremely high for growth. Keep in mind, the market tends to grow at a mere 10%. And so if you think that if your current investment in AMC is going to go up to even just 850, then it's worth holding on to because 20% return on investment year over year is fantastic. Now, once it gets up to 8, you can sell it. And then you've basically made 20% on your current investment. Now, if you've invested a lot higher and you've already lost it, it's like, that's money in the wind. You got to forget about that, move on, and start thinking about what's the best action for me right now. If anything, I'm really excited actually for all the potential investors that are coming to the table now who have never invested any of their money. They're starting to get some real financial literacy here. And that's fantastic because it's good for everyone. It's good, you investing your money into the economy is good for me because when the economy gets capital and it gets funding, it is able to grow faster, and you'll see, more of a societal boom for everyone, not just these rich hedge funds that are screwing us over. Okay, Wonka82 in Discord asks, question, with all the talk with GME and AMC, I have heard people say we should sell limits for super high amounts. Can you go over how sell limits work? And if this is something you would recommend for these types of stocks. In a previous video, I actually already talked about what I'm doing in terms of setting sell to limit orders, which is basically a sell spread, right? So I have a certain portion of my stock being sold at a lower price, another percentage of that being sold slightly higher and higher and higher and higher until 100% of my stock is sold. So a sell limit, just by definition, since you're asking how that works, is basically saying, the market price goes up and down constantly. Like you see that on the ticker symbol, right? It's going up and down, up and down, up and down. When you say, I want to sell when it hits this price, you're basically setting a limit of where when the market going up and down hits that number, and now your price is below market price, it'll sell to a buyer who has a higher willingness to pay than what you're willing to sell, meaning you will sell for at least your limit. And so what creating this spread does is, let's say the stock, over a course of 5 days, and you have sell limit orders at like 15, 30, 45, etc. It's like doing its bouncing volatility, and it hits that lowest one that you have at 15. Well, all those will sell, right? And you'll get your money and you'll take that out and that'll be in your account now. You'll have your money in your account. If it continues to go up and then hits 30, then all the orders that you set at 30 will then at that point, right then, sell, and you'll have that money in your account. And then if, let's say, it doesn't actually hit that last order that you made, you set your last limit at 45, right? And then it goes down, those you're actually going to keep. Those stocks you'll still have. The market did not hit that limit price. And so those will just maintain as stock, not as cash. So that's how a sell limit works. And that's also kind of how a sell spread works. And so what people are saying is set your sell limits really high because they're thinking when a lender forces somebody to close their position in stocks, that means that they have to buy at market price, whatever it is at that moment. And sometimes what happens is the amount of shares in circulation are actually very small. And so you can imagine a situation where, let's say there's 100 stocks that are on sale at any point, right? But you have your sell limit order at $1,000, right? If all those 100 stocks that are on sale get bought up and they're still forced to buy more, they may buy at market price, and the nearest market price is your sell limit order at $1,000. And so you'll just see this instantaneous spike up to $1,000, and then once they've purchased it, it'll go back down. So here's a picture of that actually happening. You can see that, the market's just going around here at this price, which I think is about $12, but occasionally you just get this random ass really high spike at 1980. Now what that means is they bought at market price, and someone's sell limit was set at 1980, and it triggered because there was no liquidity in the market, and they had to buy at market price, or they chose to buy at market price, and they hit the lowest possible price point was this really high 1980. So you can imagine a squeeze, right? If everybody set their limit to $1,000 and somebody was forced to buy, then they would have no choice but to buy at $1,000. And again, these forced to buys happen when either they're trying to close their position and they think that market rates aren't going to go down, or their lender forces them to close. There's various reasons why people would just buy at market price no matter what. So this is what you'll see, is these random spikes. And what we were hoping for was a lot more of these, because when you see a lot more of them, that means people are holding, they're not selling, and some people are just being forced to buy. But I think these spikes have actually dwindled away. If you notice, this is, I think, like from 3 or 4 days ago. This is what we were looking for when we say set your sell limit orders to a certain price, and then hopefully market purchasers or purchasers at market price will hit your very high limit. It's kind of a lot there, because you have to understand what how some sell limit orders work. Then you have to understand the volume of stock being sold. If you still don't understand what's going on there, just hit me up in the Discord and I'll try to explain a little more. From Coca Jesus, yo, can you touch upon options trading and how it works versus day trading? Sure. So first off, I think options are for the more advanced trader. Definitely don't get involved in them right away. Start playing with stocks originally with like just simple purchase sells. Options are significantly more risky. You also have a lot of leverage, and leverage means you can win a lot more, but you can also lose your money a lot faster. So I recommend this only for after you've been trading for a while. In fact, many institutions won't even let you do options until you've been trading for a certain amount of time, either on their platform, or you can prove that you've been trading for a certain amount of time. Options are basically a contract that you agree to somebody else with that says you can either buy stocks at a certain price or you can sell stocks at a certain price, right? And there's always a buyer and a seller to an option. And frankly, it's not much different than like making a bet with somebody else, right? Again, I'm going to recommend Investopedia for this. It has a pretty good example. It has even some videos on that explain exactly what an option are. But basically you have two. Okay, I started explaining it, but I realized there's just way too much to options to try to explain into like a Q&A video. If anything, I'd have to make a completely new video about this, and I might do that at some point. But definitely recommend checking out Investopedia. Until then, they have really good explanations, really good videos on what options are and how they differ from just trading. But unless you've been trading for a while and you really understand the base underlying market of just trading shares and how that works, do not get involved in options yet. Because you can, again, lose money very quickly, and you can also gain money really quickly, but you can definitely lose money very quickly. Okay, next question from Far Contract. It's pretty obvious the tanking in stocks was due to Robinhood banning all buy orders on that day. Is it possible to influence Congress to issue an order, and I know this is far-fetched, for Robinhood and all culpable brokers to buy back our shares at the price before they were restricted? Can we hold other people accountable for your loss of stock? And now normally you'd be like, no, you play the game, you lose the game, you take the loss and you walk away. But in this case, it's clear that there's more to it. We have two things that are the main things to focus on. I would be skeptical in thinking that this is actually going to result in something substantial. U.S. House panel announces that they want to hold a congressional hearing on February 18th. They're going to have various people there, including the CEO of Robinhood. Supposedly Deep Fucking Value is also going to be there. He's going to testify and explain his position. Usually congressional hearings don't really... They're mostly for publicity, and they don't actually end up in any sort of action. But I would say that something that could end up in action is this other lawsuit where Robinhood is being sued over the GameStop meltdown. They're basically claiming that there's some conspiracy between Robinhood and the short sellers or their parent company, Citadel, and that they did the actions they did not because of liquidity reasons, but because they wanted to cover their share owners' ass. That's an ongoing lawsuit. So if the class action lawsuit goes through, then you would be able to claim whatever your part is in that settlement based off of whatever they settle on. Now, I'm not sure that this lawsuit has much legs, because if you're looking right here, in Part 16 of the Terms of Service of Robinhood Customer Agreement that if you're using Robinhood, you signed, it does say that you understand that in Robinhood's discretion, they may prohibit or restrict the trading of securities or any substitution of securities in any of your accounts for any reasons that they want, without notice to you, without prior notice to you. There's nothing that they did against their own terms of service here. And so it would take a hell of a lawyer to figure out and convince a judge or jury that this is something that they can be sued on. Either way, I would say Robinhood definitely shot themselves in their foot here, because there's clearly a huge exodus of people that are leaving the platform, whether they believe that they were conforming to their terms of service or not. They don't care, and most certainly their valuation will take a tank. All right, next question is by Ben, another one from him. Speaking of the prisoner's dilemma, which is a video, what is your opinion about a poll/vote on sell points to get a feel for people's feelings beforehand, making absolutely clear that you're committed to your sell point? I think this is a fun topic to talk about, because this is basically talking about social dynamics between people. The market itself is an interesting dynamic that happens between people, and the reason that VW squeeze was so successful is because it wasn't a bunch of people, a bunch of entities trying to collaborate. It's much easier when it's just two. And we've talked about that in a previous video as well. But here we have a massive amount of people. One, getting a poll/a vote from all these people would be incredibly difficult to do, right? The best alternative, as I explained in my previous video, was that we all got in on one single hedge fund, more or less, and that hedge fund just set the limits for everybody, right? Now, we could all vote on that, and that's a fantastic topic, because that's what I'm going to be talking about in a forthcoming video, is voting dynamics. But if we all voted on, this is what we think we should set the sell points to, majority wins, or some sort of average of everybody's wins, then that would be what the hedge fund, our collective fund, sets it at. And that would be great. I mean, that's like true social dynamics working the most efficient way possible. But sadly, of course, getting those things organized is incredibly hard. It takes a lot of leadership and a lot of time, frankly. And so it would have had to been made much more ahead of time if like Deep fucking Value went in on that and started to create it, and everybody started putting money into this one fund. That would be where we would see success. But to do this now, of course, is almost a mute point, because one, I think people are changing their opinions all the time. There's no culpability, right? If I say I'm selling it for 10, then I might just undercut you at 9. Then my sell order gets hit, but yours doesn't. So there's a lot of like, I guess, dirty tactics that can happen unless like we are actually a collective. This actually talks about the beauty of smart contracts, if we're talking about cryptocurrency, just as a quick side tangent. Because if we all entered a smart contract and that was essentially the hedge fund, then everything would be solved, right? We would be obligated by code contract in order to do exactly what we said we would put out to do. It was awesome how unified we were at the beginning of this, right? And everyone had a goal. The goal was clear, it's just simply buy and hold. But as soon as stuff got a little messy, shit hit the fan, right? And so how is it that you avoid that stuff? Well, you create a fund where people can't touch it and change what the original plan was. Because really, if everyone stuck to the original plan, we would see squeezes in both AMC and GME, no problem. But sadly, due to the dynamics of many entities trying to optimize for themselves, we see something where there is no spike. So to answer your question, fantastic idea from 3-4 months ago. Not so good of an idea anymore, because it's just too late. Okay, last question. It's the fun one of the bunch. Personal question for Teddy. How old are you? Because you said in one video that you've been working/investing for 10 years or so. What do you do professionally? And have you ever been abroad outside of the US? Just to get to know you a little better. Well, isn't that sweet? So I asked my Discord how old they think I am. And I got 26. You look 20, but after that video, I think you might be 30. Well, the answer is nearly 30. Later this year, I will be. But to answer your questions, what do I do professionally? I am a software engineer. Been coding for, like I said, around 10 years now. And have I ever been abroad outside the US? Yes, actually, I lived in China for 8 months. And I can even speak a little Chinese. In addition, I've been to Japan, Europe, various countries in Europe, and I actually have plans to go to Chile like later in this year. So hit up another continent, which will be fun. That was awesome. Thank you everybody who submitted questions, and I was very excited to, hopefully this helps answer those. If anybody watching has questions, feel free to join the Discord. It's in the comments below. Feel free to post questions in the Q&A. I'm definitely going to be doing this again because I think it was so much fun, and I think it helps a lot of people in the community. And it's kind of nice to be interacting with the community more so than just making my own videos where I have to think of what to say. Instead, you tell me what to say, which is great. I just want to call out that the next video absolutely is going to be about this. This is the short interest publication schedule on 2/9/2021. We get to find out actually the correct value that all these hedge funds and large FINRA members are reporting in terms of how much stock they have shorted, which is going to give us a great information about whether or not the short is still on. So keep in touch for that video. It'll be dropping as soon as the short interest report drops. We'll also be chatting about it a lot in Discord, I'm sure. So as this GME and AMC stock frenzy kind of dies down a little bit, it's definitely not even close to over, but once it dies down a little bit more, we plan on pivoting to different topics around different aspects of society and politics. And so, but similar format where it's going to be a lot of information, a lot of data-driven stuff. If you're interested in that at all, please feel free to subscribe. It helps me a lot. It keeps me motivated, and can't wait to talk to you guys soon.